Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking NASDAQ futures. NASDAQ went up to another intraday record, reaching 5481.25, and led all the other indices higher and then led them lower, closing at 5426.50, down 17.5 points on the NASDAQ. The S&P and the Dow actually had their biggest one-day reversal in 14 months. Now, a couple of things driving both events that happened today. The ADP number, which is the private payrolls number that comes out on the Wednesday prior to the non-farm payrolls number on Friday, was up 263K. It was expected to be up 189,000. So that 263,000 jobs added number was again second month, in a row of huge beats on the ADP number. Interestingly enough, for the NASDAQ, there was only one sector in the ADP report that was negative in terms of jobs added or subtracted, and that was information technology. Interesting that the tech-heavy NASDAQ still led the market up higher earlier in the day to that new intraday record high. But then later in the day, we got the FOMC minutes. This was the minutes for the meeting that decided on the March hike, and the balance sheet reduction is going to begin according to the minutes. That temporarily sent bond yields rising. They came back near unchanged and toward the end of the day, but it did give the market concern about the pace of Fed rate hikes and the pace of the taking away of accommodation for the market. The balance sheet reduction is going to begin, and they also mentioned in that same statement or in that same those same minutes that they were concerned about equity prices, which is an interesting thing. They said equity prices are quite high. Now, they didn't actually express literal concern for the level of prices, but for them to mention them at all in the course of the meeting and have them be released as minutes, which they know obviously everything they say is going to be released as minutes, is definitely something to reference. If they're talking about equity prices, then you can make the jump pretty logically that they're concerned about equity prices, and equity prices responded the way that you would expect the Fed would think they did, by closing much lower on the day. This is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking NASDAQ futures.